What's up, everyone? What is up? It's great to be back. Great to be back. Welcome, everyone. Thanks for popping in and checking out the live stream. So in today's live stream, we're of course going to do Elliott Waves, but I will mainly focus on Bitcoin. This won't really be an altcoin live stream. I'll mainly focus on Bitcoin as I came back after a 10-day holiday. So we're going to check the chart and answer some questions. So I already see the chat. So let me go to my main screen here. Welcome, everyone. Welcome. Sam, good to see you back as well after getting into a little bit of an issue with hackers, scammers, whatever it is. Good to see you back and active. And yeah, welcome, everyone. So another Sam here. I'm ready. Thank you. Bubbity, test 1, 2, 3. Crypto Arman, welcome, man. New name indeed. Arm Wrestle Man. Okay, we got an arm wrestler in the group. Lizini, welcome. Thank you. Yeah, we're going back to the regular schedule now. Oconte Studio, what's up? Cello, Memecat, dump to 55k. Not yet. At the moment, probabilities wouldn't really be on the side for a direct line down to 55. But I'll share my analysis, of course, in a second. I would personally expect this range to continue for a little bit longer, see a bit of a move up. But I'll get to the analysis. Yeah, Mark, what's up, man? How are you doing, Mark? I see that YouTube is like changing the stuff. It feels like the blue name is a bit more light now. Like it's more fresh, I suppose. Timothy, welcome back. Hope the movie was interesting. Well, I don't know. I haven't really watched the movie, to be honest. I was on the slopes ripping my my snowboard down the mountain. What's up, Gagoose, Sam, of course. Neo, but Kiko, welcome, everyone. Joan, what's up, man? Carl, Illusion Trades. Wayep, Carl, where have you been in Austria? I was in Kaprun. So my friends chose the location. I just said, yo, I'm in. And first, I think they wanted to go to, I don't know, I think they were discussing Tirol, but eventually we went to Kaprun as they chose Kaprun. We were there last year as well. Next year, we're probably going somewhere else, but it was nice. It wasn't very sunny. We had like an afternoon of blue skies, and on that afternoon these two photos were taken. So this one here and this one, that was the best day. We also had like lots of snow. I've not, like, basically the slopes were powder. It didn't make sense to groom the slopes because it was powder immediately after. So it was a good time. A lot of off-piste snowboarding as well. Learning more about how that works. Never really did that, but because of the amount of snowfall, I had the opportunity to really go off-piste and learn more about snowboarding off-piste. And yeah, it was good. It was good. So, isn't a triangle breakout? We're testing the, well, I actually had a triangle in my list, but I don't actually have it in my list anymore. And I'll explain why. Because preferably for a triangle breakout, this move down is an impulse, high probability impulse. And it's not a high probability impulse at the moment because wave 4 touched the 618. There's another way of pulling a wave 4 618, which is a little bit higher, which is not yet touched. You can finish an impulse here if you want to force it with an extended 5, but that's not the highest probability case. So, of course, the triangle that you maybe look for is this one here. So A, B, C, D, E, and then go down. It's just that the move down is not really what I like to see. I would have preferred to see a 1, 2, 1, 2, 3, 4, 5, 4, 5, right? Or shallow fours, longer in time. It's not really what we got. Also, if we consider a triangle, A, B, C, D, E, right? You can, the triangle thrust, as it's called, right? You can basically extend the BD trend line, this one here. So you extend it to the left. And then from the end of A, straight down, vertical line, you drag it onto the BD trend line that you extended to the left. And then this goes on the end of E. And then this becomes a target for a wave 5, which of course, you know, it's a higher low, so that doesn't make sense. Truncations are very rare. So if we would look for a triangle, you would expect a more extended 5 the moment it moves beyond the trust after a triangle. But generally, I'm not too big of a fan of triangles. It's just not a very reliable structure, and you know, you're going to be wrong more than right with triangles. It's always at least wait for wave DE to be in. But yeah, the move down, it doesn't really look like a nice impulse. So yeah, going next month. Yo, Carl, where are you going? We're going to Wildkogel, Bombear. Okay, I don't know Wildkogel, but enjoy. Did you have much airtime? I mean, it's not the XL line. I think the airtime here is like maybe like 2 seconds or something. It's not much. It's a small-ish jump. I want to do more park though. Now that I live close to the Alps after I moved out of the Netherlands, now that I live close to the Alps, we also have freestyle trainers here as well that you can just book. So that's cool. And I wanna do more with that. But yeah, I can jump. I can do like regular jumps, but not yet the big ones. I'm not used to the bigger ones, you know. So yeah. But I'm messing around on the slope, so I always like messing around. What's up, Alexandra? Hey, Millie Anthony guy, what's up? Missed your precious analysis. I also hope you had a good holiday. Thanks, everyone. Yeah, was good. Was good. Happy 3-year channel. Oh, yes, that's true. The channel exists for 3 years. Completely forgot about that, actually. Wait, let me have a look here. So the channel exists for 3 years now. Let's change this to lifetime. So my first video, so of course the channel launched very like 2022. What's this? Like June? Can I get the date? Yeah, so July 2022. But I didn't do anything with it. It was more that people in the community asked me, can I put a channel online? And then I had some private videos. So that's where the first 59 come from, which was just a Discord community. And then I didn't do anything with it till I was like, you know what? And then here we really started moving, right? So around the 20th of February. And then this is the line. So it's like a diagonal with, of course, sometimes a flat part, because here I was getting married. So we were gone for like a month, and some smaller bits here, like I'm on holiday and whatnot. But generally, really cool to see. So yeah, thanks everyone for subscribing. 23,380 Elliott Wave nerds on my channel, and I'm happy you guys like the content and you know, enjoy what you're seeing. Private videos, yeah. I mean, even like I even had Dutch videos where maybe I can. We're going into the analysis in a few minutes because we're getting to the end of the chatting, and then we'll get to it. But let me show you the oldest videos, guys. I mean, very. So in the beginning, in the beginning, I don't know if you've seen that. I think it's an Indian man trying to read that that paper. In the beginning. Anyway, it's really funny. So 11th of July. So I was in you know, Discord communities and whatnot, and I was trying to share my early Elliott, exactly why I'm early Elliott Wave analysis stuff. And I made I first made videos in Dutch. You know, I was just trying to make some videos here in Dutch, and I was like, yeah, that ain't really my thing. You know, I speak so much English in my daily life. I have an English speaking wife and English audience. Of course, more people speak English. So I was like, yeah, let's do English. But I basically created a whole plan. So yeah, this is where it kind of like started. Then we had some of these in August, and then I was not really happy with this. So, you know, early phase. You can also see here like the views, right? 900. Oh yeah, this one was online for a long time. But basically, fewer than 100 views, no? And if we go to today and we go to the videos, nowadays it's about like 3 to 4K. Sometimes we have 5, maybe sometimes 2. Oh, here almost 6 here. 2.5, 2.9, 2.5. Actually, the recent videos were high. It looks like 2.8, probably because of emotion, right? Emotion in the market. 3. So I suppose it's more like around 3-ish, 2.63. So yeah, a lot happened in the past 3 years. But thanks everyone for being here. So let's start. We'll cover this as well. What's up, Yoav? What's up? What's up? In the beginning. Okay, let's begin. We're going to focus mainly on this range. And the reason I want to focus on this range is because the information before this low was created is kind of irrelevant from an Elliott Wave point of view. Sure, there are scenarios on the weekly time frame and there are scenarios on the daily time frame. Right? We have the daily time frame impulse. Is it finished here, or do you get another 4 and a 5? If so, this wave 4, if you do move back up once more towards 71.9, you got to count this as a single 2. This is a single 4. Otherwise, the 2-4 relationship is not correct. So if this is your 2, or this one, and this is your 4, your wave 4 is really big. So, you know, there's still a possibility of a 4-5 here. But maybe it's finished. It just depends on local price action. Other option is WX, and you look for another A, B, C, and a Y. So in both of these cases, what they kind of have in common is that as price is ranging sideways here and the speed of the move down is reduced, it becomes interesting to look for potential long opportunities as well. Because if you're looking for 4-5s, then once price starts moving into 4-5s, you kind of expect this to happen. So the ranges come back, volume is decreasing, preferably in 4-5s. You get a few more lows into support, and then you curve back up. And then you have to observe the move towards the upside. And same is true for a wave A, and then you look for a wave B, which of course is also a bit of a move towards the upside. And generally the minimum target for a wave B is the 382, which is not yet touched at 74.5K. So as you can see here, price did not reach this level after creating this low. The question is wave A finished? It's the exact same impulse as the wave 5. Is 5 finished at this low? Yeah, maybe. Right? It might be, and one could look possibly for a bounce. The thing is that all I just said in the last minute doesn't matter. It's because the lower time frames will guide us, right? This will tell us more. Of course, if you are a swing trader or investor, then the daily time frame might matter more. I actually had a question about this in the previous live stream, where on the weekly time frame, someone said, well, the lower time frames are interesting, but I'm more of a higher time frame trader or like investor. And it's quite interesting to know when I can look for entries again. Right? And on a weekly time frame or the daily, right, we have this move to the downside. We were looking for a drop to the downside anyway. So here I am still covering the weekly. It wasn't really the plan, but generally we were looking for price to move down anyway. Exactly the same structure as all the previous bull markets, even though my chart here goes to 2015. You can go back and then it's the same thing. So we have in the beginning a couple of 1-2s, overlap, price creates a gap, and then the ranges return. Same here. So we were not looking for a multi 1-2 and explosions to 500K, 1 million, and all the moon boy shit. No, we were looking for drops to come because, no surprise, price over here had overlapping sideways price action, then creates a gap to the upside on increasing volume, followed by overlapping structure. I mean, it just missed overlap by a few dollars, but the ranges come back, right? Sideways, more sideways price action, curving from vertical back to horizontal on decreasing volume. Right? Very, very typical for price to then turn around, right? And see a dip. Right? Do you know when it's coming? No, but do you know it's coming? Yes, right? You know it's coming. So now we have this dip, and to no surprise, right? It's a solid dip, 50%, not too shabby. You generally expect after a structure to the upside like this, you expect a retracement to the 382. This 382 minimum target would be on linear scale. All right, so then the minimum target was 84.9K, or sorry, 83.9K. Basically, 84K was your absolute minimum target for a drop, which was already a 33%, and then you start observing. Now, if I put it on log, right? So on log, we're on a log chart. If I put the fib on log, then it's 56.6. Wouldn't be surprised to see it touch, to be honest. So on a weekly time frame, Elliott Wave analysts, or actually Elliott Wave investors or swing traders, had no business holding on after this high because of the potential of a 5-wave structure to be finished here. Now, this was a higher probability corrective move, so one can reinvest, look for price to move up and take out the high. But then you again see this, look, from vertical to horizontal, it's the same stuff, overlap returning, ranges become larger, right? Get out, right? It's just like shouting to you, like, get out, right? And then wait for a new opportunity. Generally, people like to hang on because of the moon boys or the greed, like, what if I miss a move to 500K or 1 million? Well, in that case, you just need to find a new reason to enter. If price would move up, there's always going to be another range, which is higher probability corrective, and then you can join, right? But at this moment over here, it's very risky to still be in the market after such a move towards the upside. On a weekly time frame, we could count an impulse here, 5-wave. Is that a wave C? Is that a wave A? Is it maybe even a wave 1? That would be dramatic. 1, 2, 3, 4, 5. So highest volume was the first leg to the downside if the volume wants to work. So, oh no, this one, the latest move. Now, from an impulse point of view, highest volume here, preferably that would be a 3. I mean, you know, but then it means that this would be like a 1, 2, 3, 4, 5, right? Is that a possibility as well? Like 1, 2, 3, 4, 5. At least on a weekly time frame, there is, in my opinion, not really a reason yet to engage. What I would like to see is one of two things, right? So if I'm an investor or a DCA guy, of course, have your own plan, If price is moving down, you may like already have limit orders and you're like, well, you know, 60K is pretty good. Like, I'm just focusing on an Elliott Wave methodology, right? So yeah, you know, everyone should have their own plan. But I would like to see one of two things. Number one, price is on a weekly time frame going to continue moving down, but then I'd like to see volume decrease. Currently, the peak is in the low. So either I like to see volume move down, decrease, right, and create a bottom. And then over here, once we see price moving from vertical to horizontal, overlap returning, it becomes interesting. And then this move up would possibly be a wave B for the bears, or one could possibly even look for continuation for the bulls. Basically, this impulse down would then be a wave C or a wave A. I mean, we just have to wait for the move up. It will give us all the clarity that we need. It doesn't make any sense to count this as a C or a wave A if one counts an impulse, because you don't know. It depends on the move up if it's a wave A or if it's a wave C. Of course, there is the possibility of ending something here, right? 1, 2, 3, 4, 5. I've showed it earlier in the stream. 1, 2, 3, 4, 5. We can end something here. But it's on high volume, which is not really what we like to see, right? So it's just that the risk is higher. And if we consider like risk in building plans, then I don't really enjoy seeing this. And this is only on the weekly, right? If we see an opportunity on the 1 hour or the 50-minute, which is long, then one maybe takes that opportunity here and it becomes a bigger move back up. But that's then a 1 hour, 50-minute opportunity that becomes a swing trade. It's not an initial, the idea itself is not a swing trade. It's more like a day trade turning a swing trade. You know? So go down, volume decreasing. The other opportunity that I would engage in is seeing a 5-wave move up. Get a 5-wave up, miss the move up, but then trade the retracement. And that is the opportunity, right? And now you have a 5-wave up, proven structure, right? An impulse, which then provides a very clear plan, right? You're not sniping the low, but you do, as I say, you do snipe probabilities. You wait for probabilities to clearly be in your favor. No? So that is what I'm kind of looking for in a weekly time frame, which is very high, right? It takes a long time for things to play out. But yeah, on a daily time frame, same thing is true, right? It's almost like the same at the moment. We focus on the right side. We could finish something here. We could. 1, 2, 3, 4, 5. Is it very nice? No, it's not very nice. This wave 4, thank you, maybe a band-aid. I knew it. I didn't even have to check. I saw the green pop up on the right, and before I even read the name, I already said you're like maybe a band-aid. Cheers, Jason. Oh, of course, by the way. Of course. What's this? What's this? Hello? What's the chance? What's the chance? Yeah, exactly. Dude, what's the chance, mate? Rigged. What the hell? So anyway, YouTube, you gotta up your game, man. You can't do this. So look, for an impulse, if this is your wave 4, I've said in previous content, if that's your wave 4, right? 1, 2, 3, 4, 5. Wave 4 is very long in time. It's a really large structure compared to your wave 2. It's valid structure-wise, like price-wise. It didn't retrace high enough to invalidate a wave 4. It's just that time-wise, it looks like down, sideways, down. Right? You would almost consider like an ABC to the downside here for maybe even a WXY or something like. It's just that because the volume sits in the low, probabilities decrease at the moment something would be finished, and that would be wrong if we get a 5 up and then a 3 down, and then we continue. We look for another 5 up. So and with finish, I mean a larger corrective structure. Right? You can finish a wave C here, ABC, for example, or 1, 2, 3, 4, 5, and then correction. Side note for Flotty. Side note, by the way, corrective structures do typically end on a volume spike. Maybe some of you may remember the 49K low. Very high volume in the low. Yo, what's up, Divine Hood, Flotty? How you doing? Were you snowboarding in Austria? I was indeed. I was in Capun, man. I was in Capun. And cheers, Divine Hood. I had a good time. How are you guys? Flotty, how are you, man? How are you, Flotty? Haven't spoken to you in a while. I hope you're good. So yeah, there is a possibility of finishing something here. We'll find out with the move up, no? And that brings us to the local price action. You got a friend in Sri Lanka. I personally don't. I have YouTube friends in Sri Lanka, meaning viewers, but you know, not like people I physically know. What's up, Solid Fab? So yeah, the local price action. Now, in a nutshell, I would expect this range to continue or look for a bit of a bounce. Now, let me explain why that is. Starting with 3 scenarios. I covered the triangle option that someone mentioned earlier, right? This one here. I don't favor the triangle option at the moment because of the move towards the downside here. And I'll explain this in a little bit more detail now. So if this is your finished triangle, A, B, C, D, E, first of all, your wave C looks more like an impulse than a zigzag. This move to the upside here. And all of the waves in a triangle have to be a zigzag family structure. So this one is a little bit odd, right? Now, second, this is your wave D. This is your wave B. We can count them simple, maybe ABC with a diagonal in a C, maybe the same here, but probably one of these two would be preferably counted complex, and if so, preferably wave D compared to B. D is more often complex than B is. And then we get to the move down. I don't like this as a nice, clear impulse. So you can also see here that price move down, volume sits in the low. This move. Preferably, that's a wave 3. And these waves are 1-2s. So preferably you see 1-2s, 3 high volume, and then 4 5s. But if we take a fib from this high, which then would be the high of the latest 2, to the low, price touched the 618, which invalidates wave 4. Right? Incredibly low probabilities that wave 4 touches the 618. So that is not what we like to see. Now we can force an impulse in here, like 1, 2, 3, 4 extended 5, for example, or 1, 2, 1, 2, 3, 4, 5, 4, 5. But I highlight the word I force because it wouldn't be your first pick. right? It would not be your first choice counting it in such a way, right? The probabilities would be higher for this to be like not like like a corrective structure compared to initially considering it as a very clear impulse because of this move down on high volume ending here. An extended 5 impulse is a you know, the most common impulse is an extended wave 3. Then we get to extended 5 and then extended 1. Extended 5 would be like quite rare to see, like extended 5. I would say it's more like very uncommon, and a extended 1 is actually very rare to see an extended wave 1 impulse. So it wouldn't really be your first pick, counting this as a very nice impulse, right? Even though all the rules applied are correct, it's your wave 5 that's extended, not your wave 3, so it's not really ideal. What if it's a 3-wave move to the, well, if this is a 3-wave structure down, then after a diagonal, you can only count a, after a triangle, you can only count a diagonal. So you have zigzag family structure up, and then you do this. So mind you, extended wave 5s on commodities are more common from a daily or higher time frame, right? The primary time frame or primary degree in Elliott waves or higher. So commodities probabilities are higher for extended 5s on a primary or higher degree, as per the Elliott wave principle, that is. This one. So that's in the Elliott wave principle book. Yes. Yo, cheers, Joe Budden. Okay, so now that we covered the triangle and this local move to the downside, let's cover some other options. WXY, this is just a sideways range. Okay, this is still bearish, by the way. After wave Y, you expect price to move down. So it's not bullish. So in this case, WXY. W is a zigzag structure. 3-wave move up. Wave Y is a flat, ABC. We can position wave X here or here. Honestly, it doesn't matter, right? It doesn't matter because you're still looking for this. And that's what matters. That's what you want to focus on. So in this scenario, you're still looking for an impulse up in a C, which either moves below this or beyond this high or that high, right? Depending on where X is placed and A is placed. And this is quite advanced, but to keep things simple, it doesn't matter where you put your wave X. Because in this scenario, you're still looking for a C up, which is preferably an impulse. So a couple 1, 2s, 3, couple 4, 5s, end it and then go down. The moment you see price move from vertical to horizontal, volume is declining over here and ranges come back, right? Overlap is returning, preferably into an area of resistance. One looks for price to go down. And in this scenario, it goes down to a new low. So basically, that's what you're looking for. The easiest trade in this setup is this one. It's the end of the impulse. Not the beginning of the impulse, right? The end of the impulse. That's the easiest one. Let me show you something else here. Morning routine. There we go. This was shared in the morning routine channel in Discord, which is part of Elite membership. So what you see here is the price action of the 13th, right, of February. So 10 days ago, price was moving to the upside. And so I was on holiday here, but I keep an eye on the chart and update whenever necessary. So this impulse to the upside, like catching the beginning is more tricky than catching the end. And you can see how I drew my chart here, right? So basically price moves up. We can see the volume here, right? Volume increasing as well. Price moves up, looking for some overlap. And then a reversal, preferably around either 74 or 71K, right? 70.9 here on my chart. Basically one of these two levels, as you can see here. That's the easy setup, right? Now let's go back to the chart. Go to the 1 hour. Go to the 1 hour. There we go. So remember my drawing, right? Drawing. This high was made at about 70.9K. Value area high-ish around 70.9K. Areas of resistance, right? Let's open the volume. We have overlap. Sharp move to the upside on increasing volume, creating a gap. Same on the weekly, right? Remember my weekly at the beginning of this live stream? Same here on the 1 hour. Creates a gap here, sharp move, increasing volume. Overlap returns, right? Overlap returns. Decreasing volume, moving from vertical to horizontal into resistance. Guys, that's always a short. That's the easy one. So you don't need to count the detail. You don't need to use the detail of Elliott Waves here. Like, so we'll publish this when my book comes out. But Koen's theory, right, is simplifying reading a chart without using, oh, how many 1-2s do we have? How many 4-5s do we need? We look at structure and volume and other stuff. This is what's called trend and turn. This is the trend and turn methodology, and price reverses. Very, very nice. So the same type of setup one would expect over here for a C. That's the easy one. Catching the low of B is the difficult one because there's multiple options at this stage here. Is this going to be, right? Is this a B? Is price continuing? No. So it's the same as with trading, I suppose, with any strategy. You want to wait for the best opportunities, not all opportunities. Wait for the best ones. Now this is your bearish pick. So as you can see, and this enforces the reason to trade the end of a wave C and not the beginning. Because this is your bearish case where you have a finished WXY, W, zigzag, X, right? Some overlapping bad price action. And then you have a flat ABC in a wave Y. That's the end. Sideways, WXY, finito. On a higher time frame, on the daily, that could, for example, be your wave 4. And now you're working on the wave 5 to the downside. No? Now, in this case, you start with a leading diagonal. Has to be said, a leading diagonal is not a very common structure. It wouldn't be your first pick. Preferably, wave 1 is an impulse instead of a diagonal. But they can be diagonals, right? So we at least have to consider them, but it does hurt probabilities that it's so overlapping and that it's a leading diagonal. It would negatively impact the probabilities of this scenario. Now, after a leading diagonal, which we label either wave 1 or A, the reason we label it a wave A is because of the potential of a wave A, WXY, inside A, B, C, a flat. If price goes down towards the low, a flat is your quote-unquote bullish scenario, and after wave C you go down, while the bears just look for continuation. So, but you expect the same price action. Now, preferably after a diagonal, you see a zigzag family structure that is most common, which basically means don't take out the low. So, 3-wave move, that's the end, that's your 2 or B, and then down you go. But that then brings us back to this. Is this an impulse? Yes or no? Right? High volume in the last wave. If so, it's an extended wave 5 impulse. Very difficult to catch the low. Or, I mean, very difficult in general to trade an extended wave 5 impulse back up because it ends on such high volume. It's very high risk, as generally you expect wave 4s and wave 5s. So a long down here wouldn't really be a best case scenario, right? It would be higher risk. Sure, there is a potential reward, but it would be higher risk initially. No? Now, because price ended on high volume here and touched the 618 taken from this high to the low, as shown earlier in the live stream, probabilities decrease it's an impulse, probabilities increase it's corrective. But if this move down is corrective, this move down has to be either a B or an X. Which therefore then means, in this scenario, leading diagonal, A, B, C, and down, or WX, and then wave Y can either be a flat, A, B, C, or a triangle. We'll have to wait and see. Continues the range in both cases. And then you go down. So for the bears, preferably price goes sideways first here, without taking out the high. Preferably it just goes sideways, or move up in a C and then go down, right? The probabilities are lower that this would be a 1, 2, 1, 2, and down in a wave 3 because of this move. It's not invalidated. We can force an impulse in here, but it wouldn't be a high probability impulse because it would be an extended 5 impulse at this stage, which wouldn't be preferred. And the other option would still be 1, 2, 1, 2, 3, 4, 5, 4, 5, which is not yet out of the question. But guess what? After wave 5, making another low on decreasing volume, you're looking for a bounce. And you continue the range. So at the moment, it's difficult to give the highest probabilities to any scenario that basically does this. In the previous two scenarios, we're looking for a continuation of the range or a bounce up. Like, you know, so upside is more important than downside, or more interesting than downside, basically. Right? So that creates the bias. Finally, your bullish case, because we also need a bullish case. So I can probably just remove the W here, actually. Oh, that's fine. So A or 1 at the tippy top of the range, corrective move to the downside, and then you look for price to move up. This has to be an ABC or WXY. You see my chart is very empty. Because if this is an ABC, it has to be a zigzag structure. Because this high did not touch the 0.9 Fibonacci, taken from this high to this low, which means a flat is not allowed. It can't be a flat ABC. So it needs to be a zigzag ABC, which means this has to be wave A. It can end here, that's no problem. Then you need a B, maybe a flat in a wave B, and then you need a C. But now we have this structure. That's not a C. Right? So if we want to consider a wave C, we now need some diagonal structure to the downside. So 1, 2, 3, 4, 5. So we're not yet finished. We need more information. And if you count A, larger B, and a C, guess what? You're not yet finished. And then after C, you look for price to move up. So then again, also like in the bullish case here, if we count A, B, C, like A is finished or 1 is finished here, and then a corrective structure down, it's unlikely it's finished. So there's not really a great reason, just like on a weekly time frame, for example, or in many other time frames, if you can't really end a corrective structure nicely, or it kind of shows or counts as a good corrective structure. I mean, at the moment, it feels a bit unlikely something is finished here. Same is true for the WXY. WXY would mean double zigzag or a sideways WXY. So we need a W, then we need a wave X, and then we basically need a wave Y to the downside. But I can apply the same things as with an ABC. It's just unlikely it's finished. If this is your W and this is your X, you need an ABC and a wave Y. Well, then again, we get to, is this an impulse or not? Maybe, right? It's not a nice impulse. If this is W and this is X, well, we need a Y, which is then either a flat, that's not allowed, or it's lower probabilities, sorry, because price is down here and didn't move up, right? A, B, C, or a triangle. But triangle is, first of all, too early. And if this is the low of your wave A, it's now invalidated because C moved below A. So that doesn't work. So not great. So also for a WXY, one needs more patience. So there's not really a reason for me to buy yet, unless I see what I would like to see. But it's quite difficult at the moment to end something here. Now, everyone needs their own plan. Everyone, like, you know, if price moves up, you're going to be like, oh, but Koen isn't buying. Yeah, but that's my plan. You have your plan. Maybe you're buying. Maybe not. Maybe you are. I don't know. Depends on what you do. But at the moment, it's quite unlikely something is finished. It's difficult to finish something here. Can we finish something here? Yes. W, X, A, B, and a C in a wave Y with an extended wave 5. That's the end. What would make it interesting to buy? 5 up, 3 down, continuation. That's an area of interest. Now, very simply, if one would consider buying, the safest approach is to quite simply do this. Stop loss below the low. Our R to the high is already a 1-to-1. Take out the high, stop goes break even, maybe take a TP1 to cover the fees, and have the potential of continuation and just see what's here, what's coming next. We'll wait and see. Right? We'll wait and see. That's the most simple setup. It covers looking for potential wave C, right? In a W, X, and a Y. It covers this move. It covers the bullish case, A or 1, 2 or B, 3 or C. Right? The only thing it doesn't really cover is a a bearish structure, so finish WXY and down. But even in the bearish case at the moment, preferably, price would still move sideways at least, or go a bit up, maybe for flat, and then go down. But at least a bit more sideways. So it's relatively safe to long if you have a plan and understand that, hey, if price is moving sideways and this bounce up is corrective, we might go down here and take out this low. And if price is going down and takes out that low, the question is, what's that move down going to be? So there's definitely an opportunity. Right? There's an opportunity. Now on the 15-minute time frame, yes, 1, 2, 3, 4, 5. There is a potential 5-wave move up. I see it here on in the comments as well. Covered this in the morning routine as well. Now there's, let's see, 1, 2, ABC or 1, 2, 3. That's an interesting one. So 1, 2, 3, 4, 5. Sure, right? There's definitely a way to count it. Or A, B, 1, 2, 3, 4, 5, wave C. Wave C would be very long compared to your wave A, so of course it's not ideal. Let me check here, wave 3. Price move beyond the 1.618, increasing probabilities that there's a 3 here, not a C. So 1, 2, 3, 4, 5, first structure, right? 1 or A. Move down, preferably of course corrective. 2 main areas of support for a move down are your wave 4 and your wave 2 of a lower degree. So these are your 2 main areas of support and main areas of interest generally. And from those areas, you're then looking for another move up. This is your 2 or B. And this is then your wave C/3. Mind you, of course, that volume in a 3 is not a necessity. Yeah? It's what we like to see. Also, in a wave 1, volume doesn't have to be typical. Wave 1 is, of course, the first wave after a new trend. Generally, actually, when you look at the price action of a wave 1, funny enough, that the beginning of wave 1 tends to have the highest amount of volume. And then as wave 1 forms, volume actually decreases. You'll see it more often in the wave 1s. So structure leads. Yeah, of course, ABC or 1, 2, 3. Oh, there's an opportunity. I just prefer to hang around, I suppose, on the 1-hour time frame here. If I open my support resistance levels, I did have something at this low, but it's not really. I don't really know how much importance I like to give it because, as you can see here, so this low was at the bottom of a 3-hour order block. It's not my typical way of using order blocks, but this here, right, 3-hour red candle, and then you can see price pushes up. So this naturally is an area of support. Also, we had some ranges here before this push towards the upside here. So sure, it's an area of support, and it got touched, so I remove it from my chart. But yeah, we'll see. We'll see. But the conclusion is that after all of the talking, the probabilities are higher this range continues or look for a move up, which basically means that longing is safer than shorting. See, like, do your own analysis, like NFA, as they always say, no financial advice. Like, bottom line, you need your own plan. But from an Elliott Wave point of view, there's not really a clear indication in this range that price just dumps in a straight line. Preferably this range continues, and then at a later stage, we'll see, right? We can add, like, people that want this low to be taken, yeah, that's absolutely still on, right? There's absolutely a possibility. There's no reason here that yet says, like, it's not. There's an option. There's a possibility. Would probably be nice to first bait some longs. So if price would move up, baiting some longs, grab the long liquidity, and then go down later, if so. But preferably this range continues, or we get a bit of a move up instead of making it too easy, I suppose, and just be like lower high, lower high, lower high, lower high. And the shorts are printing and printing and printing, and the shorts just shorts don't get punished, right? Even the late shorts. It would be nice to see them stopped out, liquidated, grab that liquidity, and then once the longs get overconfident again and open interest is increasing, longs are entering, large positions coming in, price does this. So yeah. So that's the conclusion of all the talking. Basically, it's just like continue the range slash look for a move up. So continue the range would be bearish, right? If price hangs out here for a much longer time, there's at least a potential for a bearish outcome. But because the directional bias would be up slash sideways and not a straight line down, looking for opportunities is relatively safe, because if price moves sideways, right, in this range, based on the new price action, one can manage accordingly. Because even in a bearish case, which then would be against the potential long position, of course, even in a bearish case, if one would look for a larger sideways structure, you got time and you can always get out later, basically. So yeah, but like in all honesty here, like transparency, I just came back from my holiday. I did some admin this morning, and I made a YouTube video for Elite morning routine. But I'm not yet involved. I start up slow, so I keep an eye out on the chart, and if there's something new opportunity, I'll according to my plan, I'll be there. But you know, for now, just doing the analysis here. Besides, by the way, on YouTube nowadays, it's actually a lot safer to position yourself as an analyst, not a trader. I'm in a YouTube group or a WhatsApp group with probably all the YouTubers that you know about. And there was a conversation not too long ago on people having problems with warnings, banned YouTube accounts, not only YouTube actually, someone on Twitter or not on Instagram got banned, 2 or 3 people on Twitter. And it's generally the type of YouTubers that do like signals or really talk intensively about trading, or they show their trading environment with open trades and stuff. The AI of YouTube was going quite ham against those type of channels. So besides the fact I don't really show that type of content as I don't like it, being more on the analyst side instead of trader side is definitely a safe thing on social media, with the AIs attacking different channels. So, but yeah, upside / range, and then have a plan. If you have a plan, you know what to do. If you don't have a plan, you have absolutely no clue what to do, and it's probably a good time to to build a plan. What are your thoughts about this move down on the high time frame? Isn't this a wave 4 if a 5-wave move? I actually just explained this on the daily. I think so, there was another one here. Just to refresh up again what the primary scenario is. So on a daily time frame, we can finish something at the low. So the question is, do you get here? So do you get, for example, in this impulse to the downside? Is this ideal? No, because your wave 4 is so long, it moved beyond the base channel as well. But it's not invalidation. It's almost a 6 times longer range than wave 2, but sometimes the way it is, no? But Is it ideal? Is it perfect? No, but structure-wise, it can work. Is wave 5 finished here, or do you get one more low? No, it can be finished, right? Could get one more low. Depends if you want to snipe the low, yes or no. If you are someone that likes to snipe a low, then this would be entry, and then see what happens. And if price comes back down, there's a new entry. And if one waits for another low, but price does this, you just missed out. So the local price action here tells you the story. On the daily time frame, the question is, do you get a 4-5 or is that it? Same is true for a double zigzag here. ABC, WX, ABC, wave Y. Is your low of A in or do you get another low in A? We can count a finished structure here at the low at 60K. Right. We can count another low, but is that one more low going to, like, if you are swing trading, generally for swings, one would usually have longer stops and invalidations. Is one more low, yes or no, going to hold you back on such time frames? Probably not. Probably not. So you probably already have a plan. You're either already involved on those higher time frames or, but for me and I explained this earlier in the stream, I could finish something at this low, but it's not, I don't like this yet. Like I like to wait for more information before I really start to get involved. No. So either see a 5-wave move up, miss this unless I trade locally. That's why the local range is the most important thing at the moment. This decides what happens on the daily. Right? Is this corrective or motive? Right? So that is why I like to focus here. Because if I can get a 1-hour time frame entry or a 50-minute entry and it's a long, and price instead of going up and down or bearish or whatnot, it just keeps going and going and going. I'm already positioned, so the local day trade can become a swing. No? I don't need the daily time frame for that. But I'm not a big fan of the weekly time frame, daily time frame structure. I see a question about a flat. ABC flat is absolutely an option. Right? It is. But is this a wave C? Is this a wave A? Is this a wave 1? It can be a wave C ending on a high amount of volume here at the low. If so, what we like to see is 1, 2, 3, 4, 5, correction, and then continuation. This is your highest probability area of interest, area of entry, right there. It will be a higher low. You don't snipe the low, but you snipe the highest probability. You play the probabilities. So, yeah. 1, 2, 3, 4, 5, possibly WXY, right? WXY, maybe. It's not a nice structure on the daily, and you do want to go to the time frames where things make sense. So. Also, on a daily time frame, I explained earlier that seeing more lows on decreasing volume, that's of course ideal, but corrective structures can end on peak volume. So there's no, as long as the local range is not showing us clearly bearish signs, why do we need to take out that low? If price is going, it's always the same. If price is going down, people look for lower. If price is going up, people always look for higher. But they tend to forget about, well, price can also just turn around, right? Over here, people were counting multi-1-2s. I still don't get it to this day that most of the analysts online were looking for 1-2s here, honestly. To like 300K, 200, 500K, etc. It's like price is moving up, so we better stay bullish so that people click our videos and click the subscribe button instead of actually giving honest analysis and be like, well, guys, I think we're going to go down. And people are like, oh, you're going to go down? Why? Are you not a bull? Oh, you don't believe in Bitcoin? Right? And then price dumps by 50%. And then, the tail between the legs, they come back to the channel and be like, oh, yeah, wait, you were right. Sorry. Yeah, okay, nice. But... is something finished here? Yeah, maybe. It's just not a clear structure. Like if it's an impulse, preferably your highest volume sits in a 3, not a 5. So can this be the end of a wave C? Yes. Is it a nice impulse? No. As preferably, you like to see some wave 4s and wave 5s. It's just what's ideal, like your best case scenario versus every scenario. Right? The best opportunity would be seeing a couple 4-5s and then on decreasing volume and then move up. Every scenario would be like, oh, I'll just long and then hope for the best. Right? Now, unless on a lower time frame, that's why I love the 1 hour, unless here there is a reason to buy, on a daily or weekly, it's difficult to give a great argument because the volume over here. But on the 1 hour, if this range is higher probability, right, you move up. If this range over here is corrective down, higher probability, as per my analysis earlier, we're looking for a larger range or a move up. Okay, that's interesting. But the move up, we'll have to wait and see what it is if it comes. Right? And based on the price action on the right side of the recent low, we'll figure out what comes and take it step by step. All right. So it's on a weekly and daily. It's a little bit tricky. A little bit tricky here, but it's tricky. We'll just have to wait and see. Just like 49K here was difficult. Right? So if you go to YouTube, to my channel, and you go down to things you should know about, I think it's this one here, or not, maybe not. Was it here? No. I have a great video where I analyze that price action. Yo, where is it? How to trade Bitcoin Elliott Wave. 2 months, 4 months. No, it's much older. I have a video where I analyze the 73 to 49K range and get to, oh, here, this one. It's this one here, 1 year ago. So full plan Elliott Waves. And in this video, let me click on this video here. So you can see that the low was made and we had some more information and price moved up. And based on the analysis that I did here, you can check out these 3 hours and 10 minutes of content yourself. But in this video, I basically say the probabilities for me are highest. That's the low. However, before I really get to that conclusion, I got a bit more information to work with. At the moment here, sure, we made a low, right? We made a low. But on a daily time frame, it's still a little bit tricky to really label this as, is that the low? So that is why I'm active on a lower 1 hour time frame, because if I can get the probabilities right here, which basically means go up, then slowly the daily, like first the 50-minute probabilities would change bullish, then the 1 hour, 4 hour, like eventually the daily and then the weekly, etc. Right? But it starts on the lower time frames. The lower time frames give you the it's where the probabilities change first. So in my analysis today, I said, well, on this time frame, the probabilities are higher for this range to continue or look for a move up. Probabilities at the moment are lower for the bears, and just see this. Even in a bearish scenario, I would expect a larger range here. Just more sideways price action. Which therefore means longing safer than shorting. No financial advice. You do you. You need to plan all the good stuff. We're on YouTube, right? We're not in a financial advisor place, right? So longing more safe than shorting if you know what you're doing. Risk 1%, not your whole portfolio. And if price is going to show bearish signs here, there should be enough time to still get out, which is the benefit of being active on a 1 hour, 4 hour time frame. You can sleep at night knowing that the next day, you have enough time to react, basically. If you're scalping, going to bed can sometimes be a bit of a problem, of course. So, yeah. And if price would move towards the upside, you're on the right side. So it's basically what happened at the all-time high. If you go to my content here on the beginning of October 2025, we were either looking here for a wave 4 or a move down, which initially was labeled a wave C. But it doesn't matter. It's an impulse down versus a sideways corrective structure. That's the main difference. Wave 4 was 1, 2, 3, sideways 4, 5. and the flat was basically ABC. Now it's very safe if you use trend and turn. Decreasing volume. Whoa, hello. Sorry, you know, I'm still in my puberty. So if price moves up, increasing volume, then it starts overlapping, decreasing from vertical to horizontal, right? Decreasing volume, typical trend and turn. Price eventually moves down here. The question is, do you get a wave 4 or do you go lower? Trading wise, right? Trading wise, it's the same because both a wave 4 and a potential C down is down. Right? A wave 4 is sideways. Preferably wave 4 in time is similar in size compared to wave 2. So if we take a fib time from the high here to the low to the high, toggle on the 1-to-1, which, you know, would be it's at least a common area for wave 4, right? Wave 4 typically similar or longer. Then if one shorts, right, somewhere, whatever, it doesn't really matter the detail here. So your worst case scenario is that price goes sideways. And if it does, then price goes sideways here and you have time to react, right? 1% risk. If price goes sideways in a wave 4, then you can manually exit either around break even, maybe a bit of profit, right? Maybe a little bit of a loss, maybe. Your best case scenario is price goes down. So like when one shorts here on the 4-hour daily time frame, you like to hold on to at least preferably the 1-to-1, because if you get a wave C, price preferably doesn't reach the 1-to-1, and if you go sideways in a larger corrective structure, this would be your first wave. You still look for a second wave and still a third wave, right, to get a sideways 3-wave structure. This, we can analyze this, and then the probabilities change to bullish because this range is corrective, and then over here we're looking for price to move up, which means that any entries shorts here can be exited at break even, small loss, small win, but it's all small, right? It's almost small. While your best case scenario is down. So you can see the risk versus reward here. I try to like bring the point home of you don't need to know what comes next to still trade the opportunity. It's more about the management after. But you need to know what you're looking for, right? You need to know how to manage it. Of course, in hindsight, this was the all-time high and price went down. But if one trades this as a wave C, you exit down here, right? So that is then your setup 1-to-2, 1-to-3, 1-to-4, whatever are, and then you're done, right? And then you look for a new opportunity. But you don't need to know, like, is this a wave 4 or are you going down? Because the trade is the same. It's the exact same trade. It's just the management that's different. And I often see people being hyper-focused into one specific Elliott Wave scenario. So one looks for this as the absolute primary and this as the alternative, right? But it can put you on the wrong foot. Is that an English saying? I don't know. Like, wrong foot. Like I focus more on directional bias. The directional bias between different scenarios is this. Probabilities are higher to go down at the all-time high. If it's a 4 or an impulse down in a C, doesn't matter because the bias is the same. A wave 4 is down and a C is down. It's just that the management is different. So we can use the same principles, of course, in the local range here as well, where currently probabilities would be higher for a larger range or a move up. Do we know what the move up will be? Yeah, maybe a C, maybe another 1, 2, maybe a 3. Well, we'll see. If the range goes sideways, right, over here, and all of this, what's coming here is corrective, well, you better get out because there's the potential for price to go down. But we don't have the information yet, so we need to like wait and see. Right? So yeah, that is also like why I say on the daily time frame, it's tricky, but we can definitely have a low here, right? This can be a low. That could be your wave 5. Or you create another like 4 or 5. But from a swing trading or investing point of view, are you here to snipe lows or are you here to actually like, you know, trade. So manage accordingly. One can always start with a larger stop, and then as price is moving in your favor and shows signs of strength, short stops, position size is increasing, so your entry goes higher and higher because you add and compound, stop loss decreasing, compound, decreasing, compound, and now your position size out of nowhere is like good. But now like you act on the confidence or on new information coming in. And if you get another 4 or 5, well, you don't really expect a wave 5 to do this and go all like really far down. If you get a 4 or 5, maybe like this, you know, we have high time frame support. We still have 57.9K, right? That's high time frame support. Could be a wave 5. Let's see, what else do we have here? We have a lot of like here around 54. We have some stuff going on. So, you know, that like maybe wave 5 area. I don't know what this red line is here. Probably it's a point of control at 51.4. But yeah, and then you would still expect price to do this and get a bit of a bigger bounce up. So if this is a wave 4 and you get a 5, you don't really expect it to go too deep. And if it goes very deep, you are wrong, and hopefully you're smart enough to only risk 1% or 2 or 0.5, but not 10 or 20 or 50 or 100% of your portfolio and liquidate yourself, because that's bad trading, of course. But you wouldn't really wait for a 4 or 5, maybe. Depends on your plan. Maybe you do, which risks missing out. Maybe you don't, and you're already in, and yeah, everyone has their own way of doing things. But yeah. Anyway. Plop. And we're bottom. We are now going back up. Correct me if I'm wrong. WFI structure into volume can. Yes, absolutely. Corrective structures usually end on high volume, actually. ABCs, WXYs, triangle wave E's tends have overshoot or undershoot. But wave E can see a bit of an increased amount of volume, even though in ABCD you tend to see declining volume. So corrective structures have a tendency to end on a high amount of volume. Same was true with the 49K low ending on high volume. Currently we have this wick here on a high amount of volume. Look at the bear market low. The final leg down was the highest volume we had in the whole bear market. So it ended on high volume, right? Then we have the COVID low ending on a high amount of volume as well. The final leg down. So this is 2018, 2019. This moved down, high volume, not as high as what we had here, but it's still high volume. Look how low it was for a long period of time, and then you go down, high volume, and then it reverses. So yeah, corrective structures, they tend to end on a high amount of volume. And, it's normal to see this. And then, of course, locally, we like to see some signs of strength. Yeah. So I would agree, 876 trader. Not 786, 876. Was the 786 was taken. Could it be a larger 1-2 setup form to the downside? Finish triangle in the wave. Wait. A larger 1-2 forming. Maybe to the upside. I don't really see a larger 1-2 to the downside at the moment. Could it be a larger 1-2 setup forming to downside? I'm not sure what the larger is, but if this is your triangle, finished triangle in wave 4, so I covered this in the beginning of the stream, A, B, C, D, E. C looks more like an impulse than a zigzag, this one here, which is not what you like to see in a triangle. And also, if this is your wave E, you need an impulse down, right? 1, 2, and then 3. The issue is that this move down here is not a high probability impulse, because the highest volume is in the last leg down. So probabilities would be higher. This is corrective, this move, because the final leg, this one here, this is preferably wave 3 and an impulse, right? And then you have your 1-2s, 3, you have your 4-5s. But if you take a Fibonacci from the high to the low, the 618 is touched, invalidating wave 4. invalidating this move down as a wave 3. So the only way to count an impulse now is either count this as, or you always count this now as an extended 5. This one. And either this extended 5 is the end of an impulse, or you count 1, 2, 3, 4, 5, like 1, 2, 1, 2, 3, 4, 5, 4, 5. But it's not nice. That's forced. So that's not the best opportunity. Right? So from an Elliott Wave point of view, one would initially label this as, well, looks higher probability corrective till proven otherwise. And if this move would be higher probability corrective, then a triangle doesn't work, which is not my favorite scenario because of this being wave C, which then it looks more like an impulse. So I'm not a fan. And after your triangle wave E, you actually want to see an impulse down. But now because of this structure, low probability impulse, well, what's left? Well, after a triangle, you then need a diagonal, but it's too early to count any diagonals. So it doesn't make sense. Why there is no relief rally? It can't just keep falling. That's true. That's true. I mean, the first move up was not too shabby, 20% move. But at the moment, the probabilities here of the range for me is higher probabilities to continue the range sideways / move up. So the directional bias is up sideways, not down. And down meaning taking the low. I'm not believing in this at the moment. So the potential relief rally, depending on how much relief you want, this is a 20% bounce. But there's absolutely still the potential of another leg up. But I'm not too bullish yet on higher time frames or something. Like higher time frames require seeing basically a larger 5 up and then see a 3 down. Right? And then we can start talking about another large move up. At the moment, of course, here nothing changed. Structure hasn't changed, lower highs, lower lows. Agreed, I would like a new low and lower volume before really going in the move up, since 60K has been really corrective. So yeah, the move up, I mean, I can count it as an impulse as well, but yeah. A, and then WXY and a B with a triangle in wave Y, and then C, right? A, B, C. Or you have 1, 2, 1, 2 in the beginning. So 1, 2, 1, 2, 3. And then here you have 4, 5. And this is another 4, and that's another 5. So yeah, I wouldn't really focus on the move up. Probabilities are higher. Something finished here. And is whatever finished here a wave 1, a wave A, or is it a wave C? Which then wave C can merge into W, or then WXYs. Well, the price action over here will tell us. So hence in the live stream today, I focused a lot on this bit here. And then we get to kind of like the conclusion that it's lower probabilities for price to just do this at the moment. Even in a bearish case, you preferably still continue this range for a longer period of time. And then at a later stage, we can analyze the chart, come back, and then, okay, now we're really looking for downside. But at the moment, it's difficult to give the highest probabilities to the bears, because this doesn't look like a high probability impulse, because an extended wave 5 is lower probabilities compared to extended 3s. And yeah, and that's why, basically, like I could only analyze this structure here and get to the same conclusion. Because you really want an impulse down. As a bear, you want an impulse down. And preferably, you get an impulse down like you got this one up. Like a nice 1, 2, 3, 4, 5 wave structure, right? Highest volume in the 3, sharpest structure, TNT. Not touch like 618s and all of that mess. So the fact that probabilities are higher, this is corrective, increases probabilities to go back up and minimum just continue the range. We do have areas of support, of course, we keep an eye on, right? All the good stuff. Price touch support, by the way, which I removed from my chart. But we have some resistance, we have some support, some order blocks, all good, all nice. But It's just a general bias at the moment. Truncated 5 is very rare. The truncated 5 is generally hindsight counting. It's good to be aware of truncated 5s, but it's usually hindsight counting unless you get a very long wick. So for example, here, right, price moved down like very very fast move to the downside. Now, if there are multiple 1-2s here, you want multiple 4-5s here. However, only one new low was made below the wick. Probabilities are higher. There is 4-5s here, which means you're always working with possibly here a truncation, where that's the wave 5. It's a bit cleaner on CME. And that's because of the length then of the wick here. So if you have a very fast move, right, very violent, very quick, the risk or the probabilities increase for a truncation, right? But you're not going to count it as a first pick. So it generally, if you have a large wick and then later you might be like, oh yeah, okay, there might be a truncated 5 here, but it's not going to be your first choice usually. Yes, that's a triangle as you showed, and wave 1 finishing with extended wave 5, and now we are in the wave 2. Yeah, that's an option. That's an option. Extended wave, an extended wave 5, but it just from an Elliott wave probability point of view, it wouldn't be your highest probability scenario. Let's say it differently. If you trade Elliott waves, you wouldn't really trade based on an extended wave 5 impulse, because you would usually expect 4-5s. And the moment that's invalidated, you're likely looking at corrective instead of motive. Now, if this moved towards the upside here, so if this is an impulse, we can do this. So this is going to be invalidation. There we go. And then you have 1, 2, 3, 4, 5. Does this even, let me check. 1, 2. Okay, that's fine. So you need a 3-wave move here towards the upside. Now we can check time, put time on the chart as well. 1-to-1. Minimum target is a 0.382. Now, preferably price continues this range because this high is made before the 0.382. So even if bearish, there we go again, we want to see preferably a larger structure, right? You're at least looking for something like this, basically into resistance. And you might be, oh, what resistance do we have? Well, we have 2 order blocks here. We have a daily naked point of control and weekly naked point of controls. So there is some resistance over here. So it's interesting to look for 1, 2, 3, 4, 5 correction, 1, 2, 3, 4, 5 into resistance, maybe go down. Now, if this is a 3-wave structure to the upside, so A, B, C, for example, the probabilities for this, how can I explain this? This is the if price action does this, then I prepare you for how you should analyze it. So if price moves up and it shows this, you don't yet know at this moment in time if this is motive or corrective. Is this a 1, 2, 3, and you continue pushing through resistance, right? 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, and you may just continue, right? It depends on the reaction here. Is this an A, B, and a wave C? Is this a 1, 2, 1, 2, and a 3? Well, here we go. So if price moves into resistance and it comes down, overlapping with this high, you are not looking for 1, 2, 3, 4, 5. So that's then out, right? So an impulse is not going to be on your list anymore. 1, 2, 3, 4, 5. We don't like that. So then either a zigzag or multi 1-2 becomes your option. Well, in a multi 1-2, you can keep an eye on the size of the ones against one another and the size of the wave 2s. So in a multi 1-2, you like your second wave 2 to be shorter or equal in size compared to your first wave 2. Currently it's this one. We don't know how large it's going to be, but you have like up, down, and then up. So if price is going to do this, oh, wait. Let me just draw this and then separately. So if this is your first 2, and that's your first one, and then you have your second one, and you're looking for maybe a new 2, the moment price is going to do this and that, and then this, if this range is going to be twice the size of this wave 2 or more, low probabilities that this is another 2, because it's twice the size of this one. And preferably a wave 2 of a lower degree is equal or smaller, not larger. So I generally say like twice, if a wave 2 of a lower degree is twice the size or bigger in time, right? In time, in horizontal, right, structure, is twice the size or more compared to the higher degree wave 2. It's not what we like to see, lowers the probabilities. Another thing you can do is keep an eye on the 886 taken from the start to the end of your lower degree 1. And if price touches the 886, then the probabilities are low for a wave, for a multi 1-2, 1-2, 1-2 up, because the 886 is a very rare target for a wave 2. It happens, but it's rare, right? So we don't like to see this. So of course, then the probabilities increase for an A, B, and a wave C. So if price takes its sweet time here, right, range, price created a low here. The bulls preferably look for 4 and then continue. If price then does this and takes out this low, then time-wise, multi 1-2, low probability, higher degree 2, lower degree 2, but now your wave 2 is over twice the size in time compared to the higher degree. We don't like to see this. Low probabilities for a multi 1-2. But now also you move into your higher degree wave 1 high, 1, 2, 3, 4, 5. Therefore, an impulse is invalidated. And what remains is basically an ABC. Give me 1 second. Yo, sorry for that, but the bell rang and I can hear my wife is cooking or boiling stuff. So I was like, gotta check this out and maybe check out what's going on. So yeah, anyway, yeah. So this is how you can then approach future price action and decide on the probabilities. Now there can always be an opportunity here at the end of the potential C or another wave 1, right? You don't necessarily know if this high at the time is a wave 1 or a wave C. If this, however, is a wave 3, you expect it to just continue pushing. But if price is gonna have 1, 2s, 3, and then starts creating 4, 5s, there we go again. Kuhn's theory, trend and turn, right? Sharp move, increasing volume, overlap, sharp, overlap returns from vertical to horizontal, decreasing volume into resistance. There's always an opportunity there. But do you know if this is another like 1, 2 and then go up, or if this is a C and continue down? Well, that depends on the structure to the downside. That depends on what's going to be here. And we don't know yet. When executing, you don't know what's going to be here. So then we go back to what I said earlier in the stream is you don't, like, some people will focus on this must be a multi 1-2 or it must be an ABC. And then they trade according to that and they hold to that, right? The directional bias is what I focus on. Directional bias here is bearish. And then depending on the move here, so depending on new information, we'll see if we expect this or if we expect this. And depending on new info, I can manage accordingly. So I don't hold on to it must be a multi 1-2 or it must be an ABC. Now the move down will let me know what it is. Because I don't care what it is. I only care about being in the right direction. which in that case is short. And then depending on new info, we'll figure out. We'll find out what it is. So, yeah, I also prefer a WXY over a triangle, by the way. I don't like the triangle. I'm generally not a I'm not a big fan of triangles, like, yeah. I don't know. Triangles are not very reliable structures. They are, like, funny enough, a contracting triangle or a running triangle, it would be like, it's not your most common structure, but it would be in the next level, basically. So like common, like uncommon, rare, very rare. I mean, it's like uncommon, but it's still like they appear more so on lower time frames, but they definitely appear. So especially contracting and running triangles are your more common triangles. But I can't really count a nice triangle here with this being it looks like an impulse. So I prefer WXYs, just like 876 trader. This is, of course, your bearish scenario, but I don't really enjoy a triangle here. And this is the pattern traders, of course, like people that don't know Elliott Waves very well, they will likely label a triangle here, and they will now say, I have not watched any content, by the way, but this is, I suppose, an educated guess. So this happens. Now, your typical pattern trader would say this is a triangle. They don't know about the subways, right? They don't know about Elliott Waves and the subways and the rules and the guidelines. So they pull two trend lines, and what they see is a high, and a lower high, and then they see a low and a higher low. And now the structure is broken, price broke the trend line, and now it's retesting the trend line. So naturally what then happens from a pattern trading, a triangle trader will either do one of two things. Either they do this, stop loss in the middle of the triangle, or they do this with the stop loss on the other side of the triangle or above that high. This is your typical setup with a triangle. Not, mind you, we're not talking Elliott Waves. This is not Elliott Waves. Also, this is how I would never do this, right? We're talking about the pattern traders. Ooh, so now the triangle broke out, lower trend line broken, price is retesting, it created a wick into resistance, 4-hour candle close, all the good stuff without and then stop loss in the middle or stop loss on the other side. Now, what is very interesting with triangles is a double fake out, which is something that I have seen, well, I can remember twice. The one that I remember the most was, here. Was over here. People were also counting a triangle over here, which then fake out down, fake out up, and then we actually went down. By the way, for the ones that want to check out that price action, it's basically between 20th of May 2021 and the low was like 22nd of June. So we go back. So of course, this is like your typical pattern thing. So now it's interesting, like, ooh, there's a bit of liquidity here, right? From an Elliott Wave point of view, you're like, well, this looks like an impulse, not a zigzag. So I wouldn't really short the end of a triangle. But anyway, double fake out would basically mean drop below the lower trend line, grab the liquidity, go back up, move above the previous structure to grab liquidity here, and then you go down. Fake out down, fake out up, and then price falls. Interesting. Or single fake out, drop down below the trend line, go back up and just continue. It doesn't need to go back down. It can just also continue. But yeah, a triangle is not a very reliable pattern, even in Elliott Waves. I prefer to be careful with triangles. So if the low is in and we go to 89K, then 33.35, what can we call that? Wave C. Triangles look way too easy more for retail, just like head and shoulders. Yeah, head and shoulders would be a similar thing. But like NEMI, N4M, 333. 33, 35K would be your, like, that would be a wave C. If you want to go that far down, that would be wave A, wave B, wave C. And with a head and shoulders, so a head and shoulders, like this can be many things, right? From an Elliott wave point of view. So this can be wave 4. This can be wave 3, 4, 5, and then 1, 2, and then down you go 3. That's what the head and shoulders pattern traders want to see, because they are then looking for lower prices, of course. But this can also just be a 3, 4, 5, A, B, C. Grab the liquidity down here and then poof, go back up, never reaching the target for a head and shoulders. There's more different options here, right, with the move up and the move down and how you count it. But I think everything can work in trading. Like, you can trade everything, but you need data and you need a very good plan. So you know, if you trade every triangle, not Elliott Wave triangle, just like the pattern, and you just pull 2 trend lines and be like, that's a triangle, I'm not sure how profitable that is, bottom line. Like, I would suggest with anything, it can work. Absolutely, everything can work. But it would be good to collect data. And then with that data, you create a plan to trade a triangle, not Elliott Wave, just pattern, right? Or a head and shoulders, or a diamond. But you trade with the data in the back of your mind, basically. And you should know, that's where I put my stop, that's my TP, this is TP1, TP2, TP3, whatever. Like, you know your plan. And every time you get a diamond, every time you get a head and shoulders, it's the exact same execution. So, yeah. Afternoon, do you have step-ons? Yes. Did I see it right in the picture? Do you recommend them? I'm thinking about Clue. Ooh, I've seen a lot of bad stuff about Clue. I'm not here to influence you. Okay, let me, so if I go, 1 second, if I go to YouTube and I go to posts. So, whoops, there we go. So these are indeed a good eye. These are Burton step-ons, and I have the Burton Wave Rider Pro X shoes with the triple boa. They just choose the boot that fits you, right? Not the most expensive or cheapest. It just so happens these ones fit me well, so it's very nice. I have step-ons, the modern ones, not the old ones, so they don't click, and the boots. And yeah, they're very nice. I mean, for me, I don't feel any difference with normal bindings. Of course, I'm not a professional, but I don't have pain in my Achilles heel. I don't have problems with like the binding itself or the way I control my board. It's not more sensitive to me. It feels very, very natural. So I'm very happy with that. Can I recommend them? Yes. I mean, for me, they work very well, right? And they're like, I like the fact that I can get out of the lift, even when just like stepping or sliding, I can click in my shoe and just go. I don't have to sit down all the time and spend time on my arse doing the bindings, right? So it's just it makes life easy. Now, with regards to the Clue, I did a lot of research on step-in type of binding. So you have the Supermatic, you have the Nidecker, you have Clue, you have Burton with the step-on. Now you have what's the other company that got into step-on now? Like Union bindings. They got into step-on as well. So like I think back in the day, like about 12 years ago, or 13 years ago, I bought a snowboard, which I believe at the time it had the Supermatic bindings. Like basically my straps were set, but I could unbuckle the back of the binding, and then I just enter my shoe up the binding at the back, and then I'm in it. So that's what I had in the past. Then I sold my board because I didn't snowboard for like 10 years. And then I got back into it because more people closer to the mountains, more friends went snowboarding and stuff. And then now I have the step-ons. The thing with Clue is I don't really think I'm the right person to explain it, but I can advise some YouTube channels to you. So the first one is Angry Snowboarder. So they actually have a video on both the Clue 1 and the Clue 2. And I recommend, so just watch the video on Clue on the channel. Just search for his video. It's not a, you will find it very quickly. I think that's a good place to start. Most of the people you see on, so sorry that we're not talking Elliott Waves. Just if you want Elliott Waves, just make sure you ask questions. But question now is about snowboarding. Like a lot of the content creators online, like Jonathan Buckhouse, Snowboard Pro Camp, what's the other guy? Anyway, they are paid to use Clue. So it's you know, it's an advertisement, right? Now the thing I like about Angry Snowboarder is they're completely neutral, so that is nice. But you get a better idea, like they are very neutral in their complete approach. They don't care about the brand. They really look at the composition of the materials and everything. And they're very I think that it's a very good channel. They're very cutthroat, but that's what I like. Maybe because I'm Dutch. So and the problem with Clue is for me, the reason I didn't choose Clue is few reasons. One, like as nice as the system, the idea is, I would still unbuckle if I would go for lunch because I don't want to walk with my bindings into the toilet and walk into piss and shit and then click back into my snowboard. You know what I mean? So you would still unbuckle there. Now you can use it on the mountain, but if it's only on the mountain when you go up and down and you go into lifts, there's better options. The second one is that the foam, there's a big dead spot in the Clue binding. So underneath your, of course, I don't have my snowboard around the corner here with my bindings, but basically in the Clue binding, which I don't have, there's a big dead spot in the middle. Right, so a dead spot is basically an area of plastic which doesn't have any foam or something to damp, I don't know if that's the right word, but basically absorb like landings when you're snowboarding, or absorbing moguls or the bounces. So basically more of what happens in the snow and like whatever your board is touching, it goes through the binding into your foot. So you're absorbing more of the mountain, therefore you get more tired sooner, right? Now, I believe there's a few things with screws and just the general system, the slijtage, what's that? Any Dutch slijtage, like the system where you pull. I believe there's a bit of a thingy with how the hooks clip in your binding, and the durability, let's just call it durability of that system, is not very high. But then again, like, yeah, I choose for Burton for a reason, not for Clue, and that's because when I checked up on Clue, and I was interested in Clue, Supermatic, Nidecker, in Step-On, and I compared the different options. Learning more and more about Clue, I just couldn't. I couldn't do it. Like I think it's a good idea, but I would like to see an innovation in their system before I would consider something like this. I would prefer like I mean, if I could guide you, I would recommend checking out, first of all, Angry Snowboarder and their Clue review, and check out some other reviews, but not from people that like constantly snowboard on the Clue, because they're paid, right? They even have ads on their Instagram, like their reels and stuff. So just pay attention. But look at the new phase binding, look at Nidecker, look at Supermatic, look at Burton, check out those and see if something works there. A friend of mine had a phase binding in like last week, and he lost a screw on day 3. Funny enough, he managed to get another screw, but other than that, it worked pretty well. But that's more like a quick release type of system. You're still putting, like it's not like the same as a step on. So yeah. I really like the Burton step on, to be honest. I'm very happy with the product. It works very well. Yeah, it's been great. Yeah, mate, I was in St. Moritz twice over the past 10 days, and now you tell me you're waiting for me in St. Moritz? Do you live in St. Moritz? No? Do you live there? Because I was there, yes, like 2 days ago. Yes, I was there 2 days ago. And I was also in St. Moritz, but that was just for a lunch break on the 13th. On the 13th, I was in St. Moritz as well. Yeah. Yes. Oh, you live there. I was in St. Moritz twice. Yeah, we stayed the day there 2 days ago. Wait, I mean, so we slept just to like, because we booked super late. So everything in St. Moritz was booked because it's snowboard season. But I got in touch with Hotel Stille. The guy's called David Walter. He's German, but he lives in Switzerland now for like 10 years. And he told me about, what's the snowboard thing? Not Cervinia. What's the... Not Cervinia, Sergon, St. Moritz. So Corviglia. There we go. Corviglia. So basically, where we slept, the lift to the Corviglia mountain is 3 minutes or something by bus, or you park there. It's very close, and it's like 200 kilometers or something of slopes. I don't know exactly, but yeah. I wanna snowboard there sometime for sure. I haven't had the chance to snowboard in St. Moritz because with my friends we decided on Kaprun, so it was more like a stop. But yeah, we stopped twice there. So man, Suvret. Oh, I haven't done research on that one. But okay. Well, that means that next time I go to St. Moritz, I need to write it down somewhere so that you know I'm coming, and we can go snowboarding together in St. Moritz. Raclette or cheese fondue? Ooh. Could you repeat? I'm not sure, AZ369, what you like to repeat, because you wrote it while we were talking about snowboard stuff. Of course, Elliott Wave related stuff. You can of course click through the live stream and go back. But if there's any questions. BTC trend-based fit time from 2022 to 2025 shows a bear market correction has to last at least until November 2026. Well, let me have a look. Do I have it here on my index? I don't think so. I need the Bitstamp chart weekly. Oh, wait, maybe I do have it on the index chart. Okay, time. So this was like the bullish count, and the bullish count still had an all-time high in the white box from the low. So, I mean, not too shabby. Of course, the all-time high was then made exactly on the 1-to-1 here. Retracement. So if I check the time of the retracement, 1 second, checking. So this is very old. Okay, so this is comparing that to. So if the all-time high, why did I select this low? 1 second here. 1 second. 1 second. What's this one? Comparing this. Ah, okay. Wait, and then this. Okay, so having a quick look at my very old analysis, which it's a weekly, monthly chart, so I'm not hanging around here very often. So what I did is I compare these two with the current one, which then basically gives you an area. I could also add the latest one here. Now the question, of course, initially is like, if this is a flat potential, ABC, then that's the end of your 5-wave structure, which means you pull a fifth time from start to end to there, basically. Right? So, yeah, but if we use the all-time high as the area, and then we add this as well, then basically, toggle on the 1-to-1, which is apparently doesn't matter. You would like to end between October 1st, 2026 and 1st of July, 2027. But that is if like the all-time high is the end of wave 5. Right? Now, what I did is I moved the 1-to-1 a bit to the left, just in case, on this high, potential for 1, 2, 3, 4, 5, of course. And then we can move this a bit to the left. And then now it's basically 1st of January 2026 to the 1st of July 2027, which is a very large area. But it just gives you, like, it's just an area for awareness now. Oh, there we go. So, yeah, I mean, I could add this, and do this. So that is 1st of October. This one is also 1st of October. If I do this, it's the last one. So probability wise, like if we compare the previous bear markets with possibly here the next one, right? And we put the fib time from start to finish, right? Start to finish, start to finish, to the high again, then your main area would be here, which is between the 1st of October 2026 and the 1st of July 2027. So that would basically be your main area of interest. If you would consider the end of the bull market to be here with the potential of a flat, then this first 1-to-1 here is relevant, right? Because now it's not taken like to the high, so it's not click 1, click 3, 1, 2, 3. Now the third one is over here. And that is where basically your bear market started. And then, of course, you can see now that this month is after the 1. So, you know, that's for the bulls, I suppose. That's ideal. Oh, yeah, I agree with the 1-2, by the way, Yov Patron. I mean, I agree. I don't believe in the 1-2 forever. I would love to see it broken, but that's your bullish count. So that's why, you know, that's your macro bullish idea. So of course, for the bearish count, right, we also have wave 5 for the bears ended in the perfect area as well. So yeah. Also here, like what's interesting, of course, is the curve. Right, look at the curve. If you connect all the highs and you connect all the lows, you can clearly see a little bit of a trend. Of course, in a multi 1-2, people basically expect this to happen. It almost makes me think a little bit about the people that counted multi-1-2s over here at the top of the the current all-time high. So yeah, this is such high time frame. This was the range scenario. The longer sideways price action and then some 4-5s. That's bullshit. Yeah, never the highest probability. Yeah. My probabilities, this is very old, so very old probabilities. But here I already said all-time high between 100K and 180K followed by a bear market. Yeah. And now, of course, by now, people may be like, yo, but of course, 100K, 180K. But if you do this analysis while price is still hanging around at lower levels, it's an 80K area, but it's, as price then goes into that area, we have more information to work with. And we can be more precise, but this is very old analysis. So, fondue. By the way, name is, are you born in St. Moritz? Or you just like, you moved there or you live there? Is that Bitcoin is going down? Echt waar. We gaan naar beneden met de prijs en we kijken alleen nog maar naar de onderkant toe. You're talking about the local price action, I suppose. Yeah, that's normal. So what is happening locally here is very, very normal. It's very normal. Like you can't only move up, just like Bitcoin won't only go down. But currently we're here on a monthly chart, and you can also see how small this move is at the moment. I mean, look at what you have here and here and here and here, right? So it's very normal for Bitcoin or any asset to have these type of retracements with price moving down, correction up, price moving down, correction up. And at some point when all hope is lost, price reverses. And then we continue with a new bull market. So, about the monthly chart. I think, was this the first time we had so many red months in a row? So we have 1, 2, 3, 4, 5 red. I mean, it is 5 red. I do think it's a little like this was a ranging month here, right? So it just turned out to be red. Like, but of course it is another red candle, I suppose. Yeah, I mean, could have been green as well. Move down, move sideways, move down again. Here, of course, you had 2 months green, 1 month green, like a couple of greens there. 1, 2, 3, 4. Oh wait, here we actually have 5 red candles as well in 2011. Funny. And then the low was made and price continued. So I don't know. Elliott Waves is not really bothered with the color of the candle. It's more, of course, about structure and the waves internally. Now, if an impulse finished to the upside, you generally expect a retracement to your wave 4 or your wave 2 of a lower degree. This is your wave 4, and that would be your wave 2. So these are always your main areas of support for Bitcoin. If price would lose 49K and go down, I would expect it to go down to at least 32K. There's no reason to hang around in the middle, really. You do have the ETF launch here, so that's an interesting area to be aware of, around 40K. Right, price made a low at like 39. The ETF launch was about 46, so this area here would still be an area of interest just because of like what happened when price was here. So of course that could be an area as well. That could be an area as well. But yeah. Now 5 months, how to yeah, so after 5 months there has to be a positive month. Yeah, so with regard, so of course, everyone has their own plan and strategy. Arguably, one can say, well, we have 5 red candles on a monthly time frame that only happened once in the history of Bitcoin, over here, which was the low and price moved up. There was no other moment in time where price created 5 red candles with a new low in a row. Hold on, just checking. I mean, do we count this? 1, 2, 3, 4, 5. I mean, that's also 5, and then you made the low and price reverse. So I guess if we would count this as another like 5, even though this is a higher low, but it's red candles, you see what I mean? But then again, also here we have a higher low. So let's count it. Okay, so twice in the history of Bitcoin. Can we find another one? 1, 2, 3, 1, 2, 3, 1, 2, 3, 3, 2, 5. 1, 2, 3. This is 4. And then we get down here. So twice in the history of Bitcoin did we have 5 red candles. So this is not Elliott Waves, what I'm doing now, right? So twice in the history of Bitcoin, we had 5 red candles on a monthly time frame. Never has Bitcoin created 6 red candles on a monthly time frame. Now this then would be 1, that's 2, 3, 4. This could be red candle number 5. There's a couple of days left in February. Price has never created a 6th month red candle in a row. If you would use candle statistics, even though your data set is very limited because we don't have a lot of data on the monthly time frame on Bitcoin with this stuff, but still on a monthly time frame, the probabilities would be higher that the next month, being March, is going to end green. Now, where that is, if it's going to be a big candle or a small candle or a ranging candle like here, it doesn't matter. It's just that the probabilities are higher that March, if February closes red, probabilities are higher that March is closing green. Wherever green is, right, can be $1 higher than the close of Feb. It's still a green month, you know what I mean? But it can also be 100K. It can also be a new all-time high, right? Because now we're not using Elliott Waves. Now we just use candle color. So here we had 5 red candles, created a low, was the low price. Actually, maybe 1, 2, 3, 4, 5. Okay. Let me say this different. Here we have 6 red candles. Do we allow this? We're now doing like, I've never checked this stuff. So we basically need to set up some rules to collect the data. So here we have 1, 2, 3, 4. This is 5 red candles. Okay. So here we have 6 red candles, but the 6th one didn't make another low, by the way. So 1, 2, 3, 4, 5, 6. 6th one did not make another low. So now we have to adjust what we said. Never in the history of Bitcoin has a 6th month created another low after 5 consecutive red candles. And then after the 6th month, price went up. Side note. But then I suppose with that in mind, if this candle closes red, imagine this is the low at the moment, right? I mean, it is the low at the moment, but imagine this month is closing red without creating a new low. Then the probabilities on a monthly time frame suggest that, yeah, we could have maybe another red month, but probabilities are low to create another low. And we would expect a green candle on the monthly time frame before maybe creating another low. Like we comprendre? Like hopefully that makes sense what I'm saying here. Because we're just, never look at this stuff. So we're doing this live now. But you kind of get the idea, I suppose. So if this candle closes red, the probabilities are high. Next month is green. And if next month is red, the probabilities are high. It does not take out this low, but creates a higher low, after which we still expect a green month to follow. based on the data that we have of Bitcoin since the beginning. Because it only happened twice, 5 red candles in a low, and it happened only once, 6 red candles in a low. But the 6th candle created a higher low, not a lower low. Now this is pure data, right? Data can be wrong. Price can do what it wants. But based on the data, if this month is closing above 60K, you expect 60K to hold for at least 1 month, if not more. I should probably make a video about this, because now I'm doing it in a live stream. But I suppose it's quite interesting information before the end of the month. How many days does Feb have this year? I always get confused with February because of, as we say in the Netherlands, schrikkeljaar. 28. Okay, so 28 days. So we still have 5 days. 1, 2, 3, 4. Yeah. Could be interesting to talk about this in a video. Yeah. Yeah, exactly. $1 million question. I'll probably yeah, I'll probably make a short video about this where I don't cover Elliott Waves, I just cover this. And just talk about this. It won't be a long video, will be short, but people like short videos, so that's good. Add me on Discord, let me know when you're coming again. Oh man, I already started talking about snowboarding again today. Wait, open Discord. I think it's better if you add me on Discord name, because you probably are able to find me very quick. And I'm not sure if your name is the same name, because I have 3 names in Discord. Oh wait, I think I know who you are, but better just add me and then yeah, so I have 2 people called name in the group. One with capital N, one with a small n. So now of course the question is, who are you? But just find me and then add me, and we'll be good. It will be fun to go snowboarding in St. Moritz. I should come to the ice actually, like the art. What is it? Art on ice or the ice with the cars? Amazing. The retracement time of new wave 1 to 2 must be decreasing, preferably. Preferably it is similar or equal in time. So with the retracements, do I have this somewhere? Yeah. So if we look at time, then wait, what have oh, this is time of the moves up, not the retracements. Wait. So this one was shorter. Well, ending here. Preferably, I would like to count this 1, 2, 3, 4, 5. Actually, 1, 2, 3, 4, 5. Then we have this one. This correction was the same size as this one. And preferably, if we enter a new bear market, I mean, arguably a 50% decline, of course, can be considered bear market. But if you would expect another bear market similar to the previous ones, then preferably you finish on or before the 1st of October 2026. And then again, if a wave 2 is twice the size, right, if price would do this and then do this and then does this and make a new low, after the 2, probabilities are low that this is a wave 2. So probabilities are then low for another 1, 2. That would be a problem. Because then we're going to be looking for probably much lower prices. That would be an issue. Can you talk about the speed of the drop from all time high? Does it give probabilities to a flat wave 4? It is a relatively fast move. Yes, let me go to my normal chart actually here. So I'll go here. So, I mean, the speed, this range broke the speed, of course, but still, if we take a fib time from, if you count a flat, right, you want wave C to end before the 2 fib time of A plus B. So A plus B, click 1, start of A, click 2 and 3, end of B. Toggle on the the 2. Now, as you can see, that's the end of wave C. It's easily before the 2. So the speed here is not a problem. The speed of wave C is perfectly fine. Quickly checking how it compares against your wave B here. It's about a 1-to-1, a little bit quicker. Now, preferably a wave C is, of course, relatively quick compared to A and B. Wave C is an impulse, A and B corrective structures. So no, it can absolutely work. An ABC, yeah, yeah. I mean that I suppose that answers the question. Does it give probabilities to a flat wave 4? I mean, if this is a wave 4, I wouldn't label this a wave 4 though, as a flat. Like it's a really big structure for a 4. Then the question becomes, what's the wave 2? Now, if this is your 2, then now you have overlap between 1 and 4. So that doesn't work. If this is a wave 4, you need a wave 2 here somewhere. But I would not label this as a flat 4, matching any of these 2s. It makes more sense if that this is like a 2 and this is a 4, and then that's the end of 5. And then this flat would then be preferably like a higher degree wave 2, or the flat is like a W, you still get X and Y, or A, B, C, right? Larger corrective structure, sideways corrective structure. I wouldn't really look at it from as a wave 4. I would label it either like a 2, or create a larger structure. Yep. But of course, an ABC, like a wave C of an impulse, or a flat wave C, ends at the same low as an A and a 1. The trade is exactly the same. You all long at the end of C, A, or 1. It's the move back up that matters. Is the move up motive or corrective? If you get a 5 wave down and you count this as a flat, you want a motive wave up. You want to see 1, 2, 3, 4, 5, correction, continue. The moment the move up turns into a 3 higher probability corrective structure, that's a problem. Because now you're looking at, well, either WXY, that's bullish, or what I write here, you're going to be looking for A or 1, 2 or B, down you go in either a 3 or a C. 3 would, of course, be very bearish. C would be bullish at that stage. But you don't know what you're going to get till you get that information, basically. You lived there for almost 20 years. I have kids that were born here, 8 and 4 years old. Yo, wow, for 20 years already. That's incredible. St. Moritz is an amazing place. I don't know, like I've done a lot of research on St. Moritz online. I watch YouTube videos and stuff. But I've the first time experiencing St. Moritz was just like during the travels to Kaprun, basically in Austria, and stopping there. And we slept there, of course, 2 days ago. So we had a fun, like it's nice, yeah, it's fun. But I don't know too much necessarily about, like, they say the weather is good for a city that's this high. Of course, the snow, skiing, supercars, we like that. So, I mean, yeah, looks like it looks like a great place. I'm not sure if I could live there, but for a holiday, it's amazing. Of course, I can't really say if I could or can't, because I've not really experienced St. Moritz for say a couple of days, a week, like a month. I need to spend more time there to really learn about St. Moritz and the vibe, the lifestyle, the mountains, But I look forward to visiting St. Moritz. The guy that we got the room from, relatively young entrepreneur, I think a bit older than myself. He told me a lot about some of the stuff in St. Moritz and the mountains, and I'm actually very excited to go skiing in St. Moritz sometime. I mean, it would be really fun. Bitcoin is breaking down. Yeah, a bit of a retracement. I mean, it's actually been a very slow day so far, except for Asia opening. But have you covered the 1 hour? Yeah, I mean, depends on what you call the 1 hour. I've covered this range here. So these are like the levels. Wait, you lived in? Are you Dutch name? Interesting. You lived in Amsterdam before. Hey. Time too long. Will you add timestamps on the live? Yeah, but usually I put timestamps of like introduction and random chatting in the beginning, then the analysis, and at the end of the analysis, I put a timestamp in chatting again. I might then put a timestamp separately for the monthly time frame that I covered with the red candles, but I'll make a separate YouTube video for that as well. But I don't really put timestamps for every question, because then it takes a lot of time to go through the live stream and put the timestamps everywhere. In the daily, isn't wave 4 too long compared to 2? Not if wave 4 is already finished. And if wave, so that's basically your bearish scenario here. And if wave 4 is not yet finished, right? If price would do this and go back up. And the only way to allow this really to be a wave 4 is if you allow, like this has to be a full wave 2. But then still, the longer this becomes, the higher the probabilities it's not a wave 4. So the longer this is, the lower the probabilities of a 4. The higher probability something finished at the low. I live in Den Haag. Hagenaar. I am Portuguese. Wow, you've been places, eh? Portugal, Amsterdam, St. Moritz. How did you end up in the mountains? 1800 meters above sea level, no, St. Moritz? Do you use open interest sometimes? Not really, actually. No. No, I don't. I mean, that's basically, no, I don't. I use everything that you see me use in content and videos. I don't use anything else. I do have Atos open with order flow, but honestly, the only time I looked at it was early in the morning, but I don't really use order flow as well. This is the 4-hour time frame, by the way. I can do the 30. But also, I don't really use this. It's just it makes things for me a bit like overly complex. It doesn't really help me in my trading much. So of course, like I'm not an expert in order flow. I know the basics. You know, I can't teach order flow because I'm not on a level that I think is worth teaching, and I don't use it. So you know, there's probably other people out there that know a lot more about order flow than I do. But I find it interesting to sometimes have a look. But this is the second time I opened it today. First time was in the morning quickly, but yeah. So what can we see? What can we see? The day opened. Open interest has remained very stable. Bit of an open interest increase here in the middle. Session delta going down. So arguably here shorts are opening. All right, so shorts are opening. Price continues towards the upside. So these are early shorters. All right, so we have 6-7 million of shorts coming in this range here, around 65.7K. And that's not what you like to see, right? Preferably, you see them then get stopped out. So shorts are entering 7 million. Price continues up. You see the open interest decrease here. So they are stopped out over here, or at least they exit their position. So now the shorts are out of their position. Then you create a high and then you go down. You know, Yeah. So if most of the people are shorting, you know, like the bigger positions here, then it's unlikely you go down. It's the same as if a lot of people are shorting, are longing at a certain low, you probably take out that low and go down further. So 4 million, 2 million, yeah, 1 milli. And here they, yeah. So look at this guy. The price, of course, is moving down. 1 million here in the low. That might actually be a long that stopped out, by the way. 500. Yeah, that could be a stopped out long. Maybe someone longed the top over here, because we go from 24 million to 16 million, right? So there's 8 million longs in the top here. And there you go again, 8 million longs in the top. Price goes down and reverses. Also, longs are 16, 17, 19. It's quite a battle between longs and shorts. And then price falls. And now you can see open interest is going down. So the open interest that increased here, right? Some longs are coming in, and then you decrease, price moves down, people get stopped out again. It's just a game, no? Just a game. But yeah, that's the 30-minute chart. So it's basically, oops. It's this. It's just this price action here that I looked at, order flow autos. Then again, I'm not an expert. I don't use it much. I can't teach order flow. I can just say what I see, and it's people. I'm sure that some people that are watching right now are a lot more knowledgeable on order flow, and they might, you know, they can probably say what I do wrong or what I do right, or if I understand it or not. But I kind of understand the basics. I just don't really use it. I don't need it. I don't need it. Leiden. I mean, I know how it is to live in big cities. I love here because it's calm, relaxed, very beautiful to grow my kids away from the stress of the world. Yeah, I mean, I agree. I agree. I wonder actually, name in summer, is it like green or is it still white? Wait, St. Moritz summer. St. Moritz summer. What's summer like? Is it green or is it not green? Oh, it is. It is. Okay. Ah, I see the photos. I'm checking Google, just Google St. Moritz summer, and we get some photos. Aha. Ooh, mountain biking. I gotta say though, what I love is the mountains. I love mountains, man. It's so peaceful. Uh, yo, how do you mark epoch levels on chart by manual? Yeah, manual. I put them manually on my chart. There's a few different ways you can like look for point of controls. You can use, of course, a volume profile, and you can just select the start to the end of your day, and then you get a daily point of control, right? Or of course the whole range. You get the range point of control. You can use tools like Atas, like here. These are daily point of controls that you see that are extended to the right, except for this one at 66160, because that's today's point of control. So it's not relevant, it's not naked. And this one from yesterday is already touched, but it's still extended. Only if today closes is it not extended anymore. So this template is free. It's in Discord. You can just download it. Same is true for this one here. Yellow is weekly. Purple is monthly. Also in Discord. You can just download it. And then on TradingView, there's an indicator called periodic volume profile. You can use this one. Settings, inputs. You can go to week, for example, and then zoom out a little bit. And these are PVP weekly point of controls here. So, and of course, this is the current point of control. The previous 3 weeks are touched, and then this here, there's another one, 87.8. Do I have that one in my chart? Yeah, I do. So, a couple of different ways to find them. Very green. I learned to love the mountains. I wasn't always like this. I mean, Portugal is quite like, you know, there's quite some mountains as well. Like, I gotta say, living in the Netherlands, I was always interested in the mountains. Netherlands is very flat, and I find the flat surface really boring. And I always went to holiday with my parents to the south of France, and you know, you always have the mountains here with the Alps and stuff. And I always loved the mountains. I love hiking. My dad loves the mountains. He does like hut to hut walks in Austria and stuff. And yeah, I really enjoy the mountains. And now, like, I live quite close to the mountains. I mean, I live next to the ocean, but the mountains, it's like a 30-minute drive, and I'm in the mountains, 1.5 hour, 2 hour drive, and I'm at ski resorts. So yeah, you know, I love being in the mountains. Skiing holiday last week as well, being in the mountains, and it's so peaceful. And St. Moritz, I mean, again, I can't say too much about St. Moritz, but it was nice for the time we were there, like walking around in the city center. Of course, we are a tourist. Well, we have our tourist glasses on. We don't know much about the local nice places to eat and the local little things that you should know about or should visit. So we just, you know, we checked the shopping street, some, you know, been to some restaurants because we visited St. Moritz both on the way to Kapoen and back. We went like towards the lake, had a look there. There was some activity on the lake as well, as I can imagine there mostly is during winter. So yeah, it was nice. It was fun. Pleasure, Angie. Kind of nice looking impulse of the low we made. I get worried because many of the best looking impulses end up being C's and get swept. What's up, John? How are you doing, man? Good morning, by the way. Good morning. With regards to C, I mean, if I would count like a zigzag here. If like it's not really a wave C, of course. We don't have an A and a B really. So on a A, B, C, it's a bit short. So you know, but I mean, then like from a support, if an impulse, 5-wave structure, and then this, and this, of course, is your main area of interest. Wave 4 and 2 of a lower degree. So we'll see lots of overlap at the moment in the move towards the downside. We can go to a 3-minute here. Checking. 1 second. Checking. Okay. Just quickly doing some Elliott Wave stuff. Yeah, I mean, there's potential for a diagonal here, but if this would be a diagonal, your first wave 2 would be very, very tiny here. This looks like a 3. So a multi 1-2 doesn't look great if this would be 1-2 1-2 because the second 2 is so long. So if this is the low of a diagonal 1, we need a longer structure, WX, like a WXY-ish. Not great. Lots of overlap here. I mean, it's 3-minute time frame counting. So, and if the first structure here is not a diagonal, then it's high probability corrective anyway. Because then you start with a 3, ABC, maybe get another 3, ABC, and another 3, a triple zigzag on the 3-minute. I mean, it looks very, very overlappy so far. Of course, if price can change the structure, like if we look at this now, can we count a diagonal here? I don't think so. No. So if price can change the structure, that would be good for the bulls. Arguably, if price moves above this range now without creating another low, 65.9, that would be good for bulls. because for an impulse, I would like to see 1, 2, 3, 4, 5. So actually another move down. Otherwise, this kind of becomes another 3. It looks very overlappy. You know, ideal for bulls is move above 66.2. Right, in that case, you're looking for 66.6, and then we have the resistances. So order blocks, volume levels. Well, but sure, there is like a potential for a 5, of course. Still looking for a partner leg, at least with, yeah, exactly. And this move down is, of course, there's a lot of overlap. So if price can break this curve, right, if it can break the move down by moving sideways for a longer period of time, good for the bulls, right? So moving sideways longer, positive for the bulls. Moving up, changing structure, positive for the bulls. If one is bearish, you basically want this to continue, no? So the ranges become shorter, drop, and then just down. The moment price goes sideways for a longer period of time, good for the bulls. Or of course, change the structure, also good for the bulls. And then we have 5 up, 3 down, get another 5 up, either for an ABC or maybe forms an impulse, 1, 2, 3, 4, 5, or 1, 2, 1, 2. We'll wait and see. No? So currently, just support resistance, flippy. Ooh, how long are we live for? 2.5 hours. Wow. It always happens. I'm probably going to be online for an hour. I told my wife. Here we are, 2.5 hours later. Can you please show how you count wave 1 up on the theme and it's quite choppy. Which wave 1 do you mean, Strange Monkey? You mean this here, or you mean wave 1 on the left? Like this or this? Like basically 6th of Feb or today. And then I think I'm gonna call it a day. The small one. Okay, locally here. 3-minute time frame. So yo, have a good nap, John. I mean, the morning is coming. Your alarm is gonna ring soon. No? Cheers, man. So in this case, if we want to count an impulse, wave 1, right, there must be a diagonal in here because of the overlap. 2, 1, 2, right? 3, 1, 2, 3, 4, 5, 4, 5, 4, 1, 2, 3, 4, 5. That's your bullish impulse on a 3-minute time frame. So also like you don't necessarily want to go into low time frame detail. So the general structure here is that you have a range. Wait. So we got a range here. We get another range here. Quickly having an eye on the volume. Volume kept declining. So if bullish, right? If bullish, this must be 2. This must be 4. If bearish, this is counted as an ABC. This is A, that's B, and this is C. So with that in mind, without checking the detail, if this would be an ABC to the upside, right? A, B, first range, and then C, 1, 2, 3, 4, 5, without looking at the detail, if this is wave C to the upside, your wave C compared to your wave A is longer than the 1.618. Oh, not that one, this one. Now, as your wave C moves beyond the 1.618 trend-based fib compared to A, the probabilities decline for a wave C. It's not an invalidation, but it does decline probabilities. Probabilities increase for an impulse. So without counting the detail here, probabilities are higher for an impulse compared to an ABC, increasing the probabilities to see 5, 3, and 5. And then we'll see what happens next. Yep. Yeah, and then keep an eye on resistance. Let's see if we pull a little volume profile here. Point of control at 65.8 support. Currently touched the value area high here at 65.2. So, moving into some areas of support. But this is how you can analyze this move up without going into all the detail. Like you don't really need all of the detail. And a bit of a confirmation of this being corrective to the downside can be a change of structure. Right? A longer sideways range. So if the ranges increase in size, that's not what you want to see as a bear. As a bear, you want this to continue. So the moment you break that pattern by moving sideways for a longer period of time, you're looking for price to then move up, take out the high and go into resistance. Yep. Okay, I'm going to call it here, everyone. It's been quite a ride for 2.5 hours. First live stream back after my snowboarding holiday, 2.5 hours, not too shabby. I actually noticed I forgot to put my light on the laptop, so it's maybe quite dark, but you can still see me, so that's okay. So thanks for watching. Thanks for being here. Thanks for hanging out. If you were here short or long, doesn't matter. Thanks for clicking and checking out the analysis and whatever I have to say. I will put some timestamps in the video, but mainly the beginning and the end of the Elliott Wave analysis. And I will also put a timestamp in the part of the live stream where I spoke about the monthly chart and the amount of red candles. But I think that deserves its own separate YouTube video because I think it's quite an interesting thing. So in the upcoming days, you can expect a video because, of course, it matters where February ends. So probably towards the end of February, maybe on the final day, like the 28th, I make that video about the 5 red monthly candles, 6 red monthly candles, and what the data shows about it, because then we're kind of sure where February is going to end. So it might be an interesting video for the 28th before the end of the month. And thanks, guys. Thanks for being here. And cheers, Mark. And earlier, maybe a Band-Aid, Jeroen, Odin, the mods, and everyone watching. Thanks for being here. And let's see what the chart is going to give us this week. So that being said, thanks for watching. And I'll catch you at the next one. Bye-bye.